Hey everyone, and welcome to The Explainer. So, if you've ever watched gold prices spike on the financial news and just kind of wondered how the pros actually trade it without, essentially just gambling, well, you are in the exact right place. Today, we're unpacking a really comprehensive guide. We're going to take the complex strategies used by expert traders and translate them into totally actionable steps for beginners. We're leaving all the confusing jargon at the door and focusing strictly on the mechanics of the market. Let's dive right in. Now, before we jump into the charts, I have to give a quick but absolutely crucial reminder. Everything we're discussing today is strictly for educational purposes, okay? It's not financial advice. Trading inherently involves risk, and the pros know that the absolute best first investment you can make is always in your education, not in wild financial bets. You should literally never risk money you can't afford to lose. Doing your own research is just the non-negotiable baseline for anyone looking to navigate these markets safely. All right, so here is our roadmap for today. We're going to cover 1. Mastering XAUSD basics. 2. Technical analysis and charts. 3. Managing risk and mistakes. 4. Mastering trading psychology. And 5. Education and financial freedom.
Okay, let's kick things off with Section 1, Mastering XAUSD Basics.
So what does XAUSD actually mean? Well, in the Forex world, it's basically the symbol that rules them all. It simply represents the exchange rate of 1 ounce of gold against the US dollar. So when you trade this pair, you aren't taking delivery of physical gold bars to store in your basement. At least, I hope you're not. Instead, you're trading on the relationship between global gold value and the strength of the dollar. And here's a pro tip right out of the gate. There's typically an inverse relationship here. It's like a seesaw. When the US dollar is exceptionally strong, gold often gets cheaper. But when the dollar weakens, gold tends to rise. Understanding that seesaw dynamic is your very first step to seeing the market like a true professional.
Now, you might be wondering, why do these prices actually move? And honestly, when is the absolute best time to step in? So experts track the big stuff, global economic news, interest rate decisions, inflation, but they also obsessively watch the clock. Here is a surprising fact that a lot of beginners totally miss. The highest volume and the most ideal volatility for this pair usually happens when the London and New York market sessions overlap. That is roughly between 8 a.m. and 12 p.m. Eastern Time. During those hours, you literally have the two largest financial hubs transacting at the exact same time. So you don't just trade what's happening in the world. To be successful, you have to trade exactly when it's happening.
Moving right along to Section 2, Technical Analysis and Charts. Looking at a chart for the first time can be super intimidating. But chart mastery isn't about throwing 50 complex indicators onto your screen and just hoping for a signal. Actually, scratch that. It's way simpler. It's a very logical progression. Step 1 is market structure. This is simply identifying if the market is trending up by making higher highs, trending down, making lower lows, or just kind of chopping sideways. Step 2 is finding support and resistance. Think of these as invisible historical floors and ceilings where the price has previously paused or reversed. The market has a memory, and these zones are where the big institutional money steps in. It's only after you map out the structure and those key battleground zones that you move to Step 3, which is actually applying your specific trading strategy. Next up is Section 3, Managing Risk and Mistakes. The difference between a complete beginner and a seasoned pro almost always comes down to defense. Beginners tend to trade emotionally, right? They jump in without a clear plan, and worse, they risk massive, random chunks of their account on a whim because they're solely focused on how much they can win. Experts, however, use really smart, systematic risk management. They often employ strict rules, like the 1% rule. This means they never, ever risk more than 1% of their total trading capital on a single setup. To put that into perspective, if they have a $10,000 account, they structure their trades so a complete failure only costs them $100. They know their exact, non-negotiable exit point before they ever even hit the buy button. It's a real game changer. Which brings us perfectly to Section 4, Mastering Trading Psychology. Here is a hard truth. You can have the most perfect chart strategy in the world, but the market will continuously test your mindset. The pros focus heavily on psychology because they know that the human brain is actually wired terribly for trading. We suffer from something called loss aversion. Basically, it means we tend to hold on to losing trades way too long, just hoping they'll miraculously bounce back. But at the same time, we cut our winning trades early out of fear that the profit will just vanish. Cultivating unshakable discipline and building smart, repetitive daily habits is exactly how the experts override those natural destructive instincts. And finally, Section 5, Education and Financial Freedom. You see, trading XAUSD is really just one piece of a much, much larger financial puzzle. The extreme discipline, the emotional control, and the risk management you learn from trading gold, they seamlessly translate into other arenas. Suddenly, you're applying those exact same strict principles to long-term investing, evaluating crypto, and structuring your broader personal finances. Mastering the mechanics of a fast-moving market like gold is essentially a high-speed masterclass in foundational wealth building. The skills are entirely transferable to your overall financial freedom.
Ultimately, your trading journey starts exactly where we began today, with education and discipline. It doesn't start with luck, and it absolutely doesn't start with some hot tip you found while scrolling on social media. You've taken a massive first step today by looking behind the curtain of the expert approach to the markets. The mechanics themselves, they're relatively simple. It's the daily execution and the mental fortitude that are hard. So, when you pull up a chart tomorrow morning, I want you to ask yourself one question. Are you trading the market, or is the market trading you?